Hey everybody, this is Jim at sp500chart.com. It's Saturday evening, December 7th, 2019. We're going to take a look at the chart to see what the S&P 500 did in the week ending December 6th. And before we do that, as always, I need to remind you that the website and the video are for educational purposes only. Nothing, excuse me, I just ate a cracker, inhaled part of it. As I was saying, nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. This is a chart we don't look at. Well, we look at it more than we used to, but usually I don't look at a weekly chart. But today I'm going to, because for one, it shows us what I believe is our really important pattern that's at work now. That's this big inverted head and shoulders. And the second reason I want to show it to you, here's our neckline, and I want you to look at the weekly candle that we just had this week. Even though we broke down underneath this line of support, look what happened when we touched that neckline. If this were happening at a low, you would say that's a hammer. For example, this is a hammer right here we had back in early October. And that a hammer typically kicks off a rally. And indeed, even though we had a second little test of support in the middle of October, yes indeed, we then saw 6 straight weeks of gains. Matter of fact, 1, 2, 3, 4, 5, 6, 7, wait a minute. Of the past 9 weeks, we've only had one that's down right here. So that hammer could be important, because if it behaves as this one did, or as this one did, even though again we came back and tested support again, that candle right there told you where support is. So that is also a possibility with what we're looking at right here. If we look at things on a 30-minute chart, then we get to see what actually happened this week. The 2nd, 3rd, 4th, 5th, and 6th, we closed just a bit higher than where we opened. And you could see that we had, on Monday, we had that significant sell-off, and then we had a bear flag, then we gapped down. It looked like this might even be another bear flag, but instead it reversed, again, close to that neckline. We gapped up, went sideways Wednesday and Thursday, and then we gapped up again on Friday. We are not at an all-time high. Our all-time high in the S&P was set on the 27th of November. Sorry about that. I just had to speak to my son for a second. So anyway, I was saying we did not get up to a new high, but we're not that far off of it. Interesting to note too, and this is where we have to be a little careful, we are getting close to a back test of this broken line of support right here, and you have to call it as it is. I doubt we get over that line. So everything from this point going forward probably, not necessarily, doesn't have to, probably takes place underneath this line. Since it broke this past week, we should now, in all likelihood, be considering this now as resistance. That's the tendency. That's not the certainty. Please remember, everything, 100% of what we talk about here are tendencies. 0% of what we talk about here are certainties. It's all about tendencies. So the tendency would be for this line to be resistance going forward. So, guys, really all I can say is the week was one where we did break that line, and now it appears that we're in the process of back testing it. But keep in mind, like I said, it looks like so far we have found some support, judging by that weekly candle, at our neckline. And keep in mind, we've got more than one pattern that we're looking at here. We've got our big pattern that points us up to about 38.40, but we also have this inverted head and shoulders right here, and it points us to about 33.70. If you look at where that 33.70 line is right there, and you look at where that neckline is right here, we are now about not quite 60, maybe getting close to 60% of the way there. And certainly if we get up that high, at that point you would probably expect some kind of little consolidation and then perhaps another leg up to make that 38.40 target. Keep in mind, this could take many months. Matter of fact, it could take as long to reach that target as it took for this inverted head and shoulders pattern to form to start with, and that would be about 2 years. So patience is definitely in order here. If we look at things now on a 5-minute chart, I think this was a good call seeing this bear flag. I think a bad call was probably when I thought this was going to be another bear flag. In retrospect, if we move this line here, which since it's not really operating anymore, it could be that that we sort of had not quite a triangle, but maybe this line right here was describing some kind of pattern. I don't know. That doesn't look quite right either. So I'll tell you what I'm going to do. I think I'm just going to get rid of everything except for those two. And guys, we'll just see how things pan out to start the week out. I'm thinking we could go up, but let's be honest with you. We don't have a trend line directly underneath us. We do have one close to being above us. So if I were a betting man, I would say this week might start with a tag of this line, but then probably some resistance. But again, I remind you, tendencies, not certainties. So look, there's your weekly review for the week ending December 6, 2019. Thanks for taking time out of your day to watch it. And as always, thanks for your very kind support. Take care.